Okay, welcome everyone. We'll start our lesson 3. Today lesson will go through LO3 learning outcome 3, which is about understand how to gather evidence when completing an assurance engagement. So last lesson we discussed LO2 about that was audit and stewardship, and we discussed internal external audit and the editor's role and audit planning, all we discussed in the previous lesson. So today lesson key focus will be so that key focus will be on audit assurance. So today lesson scale 1 to 10, what you know about internal control and assurance? Can we rate ourselves 1 to 10 please? Scale 1 to 10, what do you think? Always good to we reflect how much we know about internal control or assurance. You think you're at 8, you think you're at 6, you think you're at 5, or you think you're at 9? What do you think, please? Okay, always good to be reflect, huh? Okay, so today lesson indicative contents, assurance process and technique, assurance planning, assurance evidence, assurance procedures, sampling, testing, computer assisted assurance technique, assurance process for not profit making organization, different stages, requirements, indicating planning, collecting appropriate evidence or completion of an insurance engagement, review reports, qualification reports, and impact of legal responsibility. So all this we will go through today lesson. So today lesson we have indicative content, and then we have assessment criteria. So we have assessment criteria, discuss the reasons for preparing relevant assurance engagement, describe assurance evidence, and review different methods, then discuss gathering assurance evidence, and then for merit is analyze and the compare and contrast. So that's all about assurance. Okay, we'll start. So first of all, what is audit? A type of assurance engagement that is carried out by an auditor to gather an independent opinion on the set of financial statement. So what is assurance engagement is all about the getting the independent opinion about the financial statement. So what is true and fair? So statement should be give us true and fair information. If statement don't give us true and fair information, of course, it's not a full assurance. So auditor never ever give the absolute insurance. Auditor can give the positive assurance. We can't give 100% guarantee there are no errors. Yes, what we check it is according to the law, according to the rule, and is transparent. Requirement, Company Act 2006, all the company to have an audit. Exemption, small company turnover less than 10.2 million, asset 5.1 million, employees less than 50, they don't need audit. Dormant company listed in entities, bank, insurer, where the standalone or the part of the group cannot be exempt. Okay, report. Auditors are required to be produce a report to shareholders. It must express an opinion whether the financial statements are in accordance with the applicable financial reporting framework, properly prepared, and give true and fair views. That's the key message. Okay, next we look now assurance. An assurance engagement with the practitioner accountant express conclusion designed enhance the degree of the confidence of intended user other than the responsible parties about the outcome of evaluation or the measurement of the subject matter against the criteria. In the case of audit, the definition work in the practice like practitioner is editor, intended user owner, responsible party manager, subject matters on which opinion is the financial statement, and criteria is accounting standard and the legal requirement. So what is a reasonable assurance? It's a high level of assurance but not absolute. Limited assurance is a low level of assurance than the reasonable, which state the negative. Auditors can never give the absolute assurance because inherent limitations of it. There are inherent risks involved. Inherent limitation of auditor's subjective judgment by director. Director may not give the full information to auditors and we rely whatever the information being given to audit. Possibility the fraud has been concealed. Sampling or no evidence are persuasive or not conclusive. That's all we need to be looking at. Okay, when we look the purpose of assurance, accountability cover a range issues discussed under the corporate governance. So we're looking the financial statement, profit warning, going concern, communication director accountability, investment protection, internal control, and risk policies. If we are in place, we can give the assurance that the company is okay. Then next we're looking assurance provision. Please, if any question you can ask, you can stop me if anything you not get. Assurance provision, communication need. Director required to produce financial statement, give the true and fair. Encouraged to communicate with the stakeholders, shareholders. Director pays going concern and management risk. Assurance provision, assurance engagement, professional accountant evaluate measure subject matters and other basis suitable criteria, express an opinion and give user level of assurance about the subject should be subject matter. Okay, nature of secretary and non-secretary audit, which is by law, and non-routine, or you can say internal audit. The purpose of audit to give an opinion on the financial statement, solely repeat the report to the shareholder, and secretary audit required by the Company Act 2006. Non-secretary audit, which is not by law required, auditor can give opinion on the other statements as well. Advantages of non-secretary audit, for example, setting accounts in the partnership accounts more acceptable to the tax authority, for sale of business and for negotiation on loan. So all these can be. Okay, any question please you can ask. Okay, so that's we need to. Okay, next we're looking review. Audit give a high level of assurance. Review state anything coming to attention of auditor. Focus on the materiality that the accountant may not give the true and fair. Less detail that an audit, less assurance obtained. Internal audit implied by organization, part of internal control, responsibility determined by the management. Help management carried out their duties. Okay. Assurance, truth and fairness. Auditors give opinion on the truth, that the fairness and the factual, free from bias, reflect the commercial substance of transaction, not opinion of absolute correctness. Obtain evidence on the test basis only and cannot be obsolete assurance due to the inherent limitation, like earlier we said. So detail, of course, when you do audit, you're going in an organization, you're requesting document, they provide the document. Whatever they provide the document, you rely on those documents. You go and check against the actual figures what is they stated in the financial statement. If those are not accurate, you can give the limited assurance, and if it's accurate against it, you can give the positive assurance. And then, of course, you never give the absolute, because the inherent risk you can only realize whatever you've been given the documents. Huh? Okay, any question? If we have, next we're looking the assurance and report materiality. What is meant by materiality? Materiality, the word is a material, is a significant. Like if it's a 10 pound thing is a missing, is a £1,000,000 worth of a company, that is not a material. But if it's a missing £1,000,000 and the fraud, that's a material. But if we don't care about 10, it can become a material. So expression of relative significance of the importance of the context of the financial statement as a whole. So material is the omission or the misstatement influence decision of the user. Consider on the whole financial statement an individual item, not the capable of the mathematical definition, both qualitative and quantitative aspect. Level of assurance determined by the nature of procedure performed, audit, reasonable assurance, review, negative assurance, agreed up procedures, no assurance, and completion report, no assurance. That's all. Audit acceptance. We need to look around the plan risk, materiality, and nature of the work, timing, inherent control, substantial compliant testing, statement of financial position, audit completion, going concern. Going concern meant by the company will carry on its business as a normal for a certain period of time, at least 12 months. Reporting and audit acceptance, all of this we need to be looking at. Okay, next we're looking respond to the risk. Audit evidence, respond to the risk assessment, overall response, audit procedures and audit plan. So test of control, which we can, substantial procedure, analytical procedure, and test of control, which we can. So auditor must obtain the sufficient appropriate audit evidence on the base their audit opinion. Affected by reliability of evidence. Consider who generated. Is it written down? Is it original document? Test of control. This has already been dealt with, which we explain a bit, in the lesson 2, chapter 2 really. Okay, so need to be evidence with the aspect of the system. Design of the system capable prevent detect the misstatement or operation. The system have they existed, operated properly in the period. Role of control of testing. When a detailed assessment of the risk, material misstatement include the expectation that the control are operating effectively. Auditor should perform the test of control to obtain sufficient appropriate audit evidence. Yes, so issue the check, payment, and check the system, inventory count. Yes, check original inventory, the inventory state in the inventory control card, so we can do audit. Any question? Can you hear me?
Yes, I can hear you.
Okay, brilliant. If any question, please you can ask. Okay, next we're looking respond to audit evidence, substantial procedure. The auditor seeking substantiate assertions made by the director, knowing that the financial statements assertion regarding the transaction and the event, account balance and disclosure. So what can be? About class of transaction, events and related disclosure. Those should be occurrent, that transaction has happened. Those are complete, those have accuracy, those have a cutoff date, those have a classification, is current asset, non-current asset, or is it expense, is it what? Yes, presentation, all this need to be. About account balances, related disclosures at the period end. Existing right and obligation, completeness, accuracy, evaluation, allocation, and classification. Also, evidence that assertion is obtained via procedures. So this we can use Analytical procedure, inquiry, external confirmation, inspection, observation, our own calculation, and reperformance. So auditor must carry out substantial procedures on the material item, and auditor can never only be based on the test of control. Okay. In analytical procedure, the analysis of the relationship between item of the data and the relevant information. Is there any relationship? Analytical procedure includes comparison of the year financial information with the similar information the previous year. Anticipate the result and the budget. Industry information, element of the financial information which expected to be conformed to the pattern, links between the financial and non-financial information. Risk assessment, analytical procedure must be used, the risk assessment procedure. Substantial procedure, analytical procedure may be used. Substantive procedures on the audit, are the suitable, is the data reliable, relevant, and available? That's all we need to be really focused. Okay, overview. Analytical procedure may also be used to ensure the financial statement seen reasonable and review. Significant fluctuation can be where the identify the editors make inquiries, consider the management response in the light of the knowledge and evidence, and carried out additional audit procedures where necessary. Practical techniques are also important. Editors of the primary accounting ratio should be familiar with these, and these also be number of significant relationship between financial, payable, purchase, inventory versus cost. So all these ratios we can use to be tested. Yes, averages. Okay. Sampling. What is meant by samples? Whole population, you pick the small proportion of it. It's called sampling. Sampling is a key aspect of obtaining sufficient appropriate audit evidence. Sample must be chosen, enable auditors to get the evidence required. So sample applying audit procedure is not greater than 100, is less than 100% of the item in the population. Tolerable misstatement. So maximum amount misstatement in the population the auditor will accept, maybe say 2% if it's a variation is acceptable. So there are the two types of sampling. Statistical sampling involves the random selection of the sample item, and non-statistical sampling involves the editor selecting sample item using his or her professional judgment. Okay, sampling. Consider the risk, expectation, misstatement, acceptable level of misstatement. Greater the resilience of the result of the test of control using the audit sampling, the lower the level of sampling risk. Auditor are willing to accept, consequently, the large sample size. So selection, random, systematic, and hazards. So item have equal chance of selection, consistent interval between the item, chosen at and will, and guarding against the bias intersection. So auditor must analyze any misstatement in the sample and draw inference for the population as a whole. Qualitative aspect, misstatement should be considered, and the nature of misstatements where they all need to be explored and discussed. Okay, we have software which is called computer edited audit techniques. We can use it, and audit software that perform the checks. Auditors would be otherwise had to do by hand, and such in getting the data and comparing the version of the program. Yes, maybe you use Sage before, management accounts and zeros and all, we need to be test of control. This is the way checking whether the system is operating properly, feed, the system, and some data see is processed and is valid and invalid. So integrated test facilities we can use to be make tests. Okay, under IES is called International Standard of Audit Assurance. We need to be make sure get the sufficient appropriate audit evidence need to be sufficient appropriate audit evidence to draw a reasonable conclusion, objective to be expressed opinions, true and fair, auditor evidence information arrive the conclusion of the report, and evidence can be informed the test of control substantial procedures, as we discussed earlier as well. Financial statement assertions can be assertion representation made by the director by approving that the financial statement directors are making the representation about the information therein and embodied in the financial statement. Transaction and event, those need to be occurrence, completeness, accuracy, cutoff, and the classification. And account balances, existent, right, obligation, complete, and presentation, disclosure, occurrence, complete, classification, and accuracy. All we need to be make sure. Audit and other evidence audited procedure, inspection of the asset, inspection of the documentation, observation, inquiry, analytical procedures. Yes, computer audit techniques which we can, such as using the computer tools to be overcome the lack of visibility, audit trail like in Sage, and various other, we can, if anything missing or any errors in audit trail, we can find it. Effective and efficiency and audit procedures as well, and the test of control. So these are internal control procedure and system detail need to be reviewed as well. Audit sampling, usually seek the evidence from less than 100% of the item being tested under international standard of assurance 530. Audit sampling, other mean is a testing and determine appropriate mean of selecting the item and test gather the sufficient appropriate audit evidence. Statically based or non-statically, is it sample or your quota sampling, whatever you're using the technique. Sample size, consider the sampling risk, and the test of substantial procedures. So that's all we need to be make sure that we need to be go through. Any question? Okay. Then audit document, working paper, important document editors perform, enable the partners to be review adequate firm, provide details of the work done, and under IES 20 audit documentation, the standard assistance as well. Okay, so we need to be look around first. Sufficient appropriate audit evidence must obtain. Test of control or evidence, reliability of audit evidence, how much is audit testing designed to full audit assertion. Less than 100% evidence is usually obtained, and all the audit work must be obtained. Then we can draw the audit opinion, evidence, and this is all being summarized in this mind map. Okay, any question here if we have? And further reading, please, we have this chapter 7 link here. Please make sure you can copy and paste it and you can read before next lesson to enhance our understanding about audit and audit assurance. So that's all today lesson, and if any question, please you can ask. Any question? Okay guys, if you have any question you can ask. We'll keep up to today up to here, and we'll go through in the next lesson, and then we'll go through assignment discussion session where we'll explain you how we can address all the learning outcome in assignment, where you can obtain the information, how you can do the reference, and how we can met all the learning outcome. That's all today, and have a nice week, and hope so I'll speak to you all during our next lesson. Thanks for listening and attending. Have a nice time.
Thank you. Have a good day.
Thank you. Bye-bye.